Have you ever wondered about the current state of the US housing market? Well, let me paint you a picture. As we all know, the housing market has been as unpredictable as a cat on a hot tin roof. But recently, there's been a noticeable cooling trend. In fact, if we take a look at August of 2023, we see a record slowdown in home price growth. That's according to the S&P CoreLogic Case-Shiller US National Home Price Index, no less. Now, don't get me wrong. Prices were still rising, but at a snail's pace compared to the previous months. This wasn't just in one or two cities, oh no. All 20 cities tracked by the index reported smaller price increases. So, it seems like the housing market is cooling off, doesn't it? But what's causing this slowdown in home prices, you may ask? Well, let's dive into it. It's like trying to untangle a ball of yarn, but instead of yarn, it's economic factors. First off, we've got rising mortgage rates. Like a bad sunburn on a beach vacation, they've arrived unexpectedly and are causing quite some discomfort. The average rate for a 30-year fixed-rate mortgage has recently reached nearly 7%. That's double what it was at the start of the year. Ouch! This sudden increase is leading to a drop in demand and sales. But hang on, there's more. Economic weakness is also playing a role. The housing market is a bit like a seesaw. When the economy is up, the housing market is usually up. But when the economy is down, well, you get the picture. So what happens when potential buyers are faced with these rising mortgage rates and a weaker economy? It's like being offered a soggy sandwich at a picnic, not very appealing. The result? Builders are reducing the construction of new homes. Why build more when the ones already built are not being sold as quickly or at the prices they expected? And let's not forget about affordability. With higher rates and inflation, home buyers' budgets are being squeezed like never before. It's like going shopping with a pocket full of change, only to find that prices have skyrocketed. In short, it's a concoction of rising mortgage rates, economic weakness, reduced construction, and worsening affordability. It seems like a perfect storm of factors is leading to this decrease in home prices. So, what does this mean for homeowners and potential buyers? Well, the decrease in home prices is a double-edged sword, presenting both challenges and opportunities. For current homeowners, especially those looking to sell, this could be a bit of a pickle. With the slowing pace of price appreciation, it's becoming increasingly difficult to sell homes at a desirable price. This in turn is leading to homes spending more time on the market. Like a loaf of bread sitting on the shelf, the longer it's there, the more its value decreases. Now, this isn't just a waiting game. Sellers are finding themselves in a position where they need to get creative to attract buyers. This often means reducing prices, offering incentives, or even throwing in a free toaster. Alright, maybe not the toaster, but you get the idea. On the flip side, for potential buyers, this could be a golden opportunity. The real estate market is starting to look like a discount store with more affordable options popping up. This is particularly true for first-time home buyers who might have been previously priced out of the market. With prices falling, the dream of owning a home is becoming increasingly attainable. But here's the catch. With the economic uncertainty and fluctuating mortgage rates, buying a home is still a significant decision. It's like trying to catch a falling knife. You might get a good deal, or you might get cut. In a nutshell, the decrease in home prices is causing a shift in the housing market. It's turning into a buyer's market, with sellers having to work harder to secure a sale. It's a tough time to be a seller, but buyers might just find themselves a bargain. What can we expect from the US housing market in the future? As we look ahead, the crystal ball shows a mixed bag of predictions. On one hand, some experts expect mortgage rates to start dropping again towards the end of 2023. This could certainly be a game changer, potentially providing a much-needed boost to the market. But let's not get ahead of ourselves. There's another side to the coin. Continued economic weakness and inflation are still lingering on the horizon like storm clouds. These could pose significant challenges, potentially dampening buyer enthusiasm and further slowing home price growth. And let's not forget the wildcard factors. Things like changes in Federal Reserve policy or sudden shifts in the economy could throw a wrench in even the best-laid forecasts. So, while we can hope for a rebound in the market, it's also important to brace for potential headwinds. As we all know, the housing market can be as unpredictable as a cat on a hot tin roof. Only time will tell what the future holds for the US housing market.